Welcome back to the Global Ledger. I'm Justin. Every so often, we release a special edition episode where we take on big, controversial topics that dominate the internet, dominate Twitter, and dominate the dinner table debates I think we've all had. Today's question is simple, and yet people get a little emotional about it, and that's okay. But the question is, does gold actually matter in 2025? Is it money? Is it insurance? Is it a relic? Is it the future? Is it a hedge? Or is it just a shiny rock people feel sentimental about? And perhaps more importantly, does gold still play any role in the modern global dollar system? Or are people confusing history with reality? Let's get into it. One of the oldest, loudest claims you'll hear is gold is the only real money. But in a world of electronic settlement, bank deposits, repo markets, derivatives, gold simply does not function as money. It's not used as a medium of exchange, not used for settlement, not accepted for margin, not used for repo. Money is always someone's liability. Gold is no one's liability. Therefore, it can't be money. Gold is an asset. It is a property. It is owned, not owed. And the modern financial system runs on owed. Gold's value today comes from something else entirely. It is outside the financial system. Think about this. Not a bank asset, not a government liability, not a claim on anyone, cannot default, cannot be diluted, cannot be frozen, can't be bailed in, as an example. So gold is insurance. Insurance against the collapse of the liability-based system. It's not money, but it is a hedge against the failure of money. And that distinction really matters. And that's just my opinion. If we look at money and plug it in to, say, The Money View by Perry Marilyn, level one would be Fed liabilities. This is reserves, cash. Level two, we could say bank liabilities, deposits. And level three, shadow money, repo, MMF shares, commercial paper. Level four, credit instruments, securities, portfolios, things like that. So gold sits just off to the side. It has no issuer, no balance sheet role, no settlement role, no place in modern funding markets. So this is why I think economists miss its relevance, but also why gold bugs exaggerate, I think, its importance. The dealer system really has no use for gold. Dealers fund themselves through repo, treasuries, derivatives, FX swaps, credit lines, not gold. Because gold can't be margined cheaply. Gold can't be repoed in size. Gold has high storage and transport costs. Gold has no central issuer to guarantee liquidity. Gold is not eligible collateral for core funding markets. In other words, gold is irrelevant to the plumbing of the global dollar system. But that doesn't mean gold is worthless. It means it plays a very different but very important role. But let's answer this question. Central banks still hold gold. Why? Not because gold backs currencies. Not because we're going back to a gold standard. Not because gold is money. They hold it because gold is the only reserve asset that is not someone else's liability. Let's look at some examples. Treasuries. Those are U.S. government liability. Euro reserves. Those are liabilities of the ECB. Yen reserves are liabilities of the BOJ. Gold really doesn't equal any kind of, there's no counterparty risk. So countries with political reasons to avoid dependence on the dollar, like Russia or China, increase gold holdings for strategic reasons, not monetary ones. Gold is geopolitical insulation, not monetary backing. So, why does gold fail as an inflation hedge? And this upsets people, but it's true. Gold is not a reliable hedge against inflation. Just look at history. Gold fell 40% during inflationary years in the 1980s. Gold went sideways during the 1990s boom. Another example, gold underperformed during parts of the 2020-2023 inflation surge. Why? Because in modern markets, inflation matters less than real rates, liquidity, dollar strength, risk premiums, and funding costs would be another. Gold trades as a risk asset during liquidity expansions. It trades as a safety asset during liquidity crises. And gold also trades as an anti-dollar vehicle under extreme stress, not as simple inflation hedge. So that brings us back to the question, does gold still matter? Yes, I do believe gold still matters, and there's real examples out there to support that, but not for the reasons I think people assume. I think gold matters because it sits outside the financial system. It protects against geopolitical shocks. It avoids counterparty risk. It's a historical anchor. It signals distrust in global institutions. It plays a role in emerging market reserve strategy. It is a physiological hedge, and it is a store of wealth, really, across generations. So that's why it matters. And that's my list. So gold does not matter because it backs currencies or anchors the dollar, or the system will return to a gold standard, or the dollar is collapsing, or any of these other things. None of those are true. But gold absolutely matters as a meta asset, in my opinion, an outside asset, an asset that doesn't care whether you believe in it. So should you own gold? Well, gold isn't a growth asset, an income asset, or a funding instrument. But it is a hedge against system-level shocks. It is a great portfolio diversifier. It's a great asset to have with no counterparty, no counterparty risk. It's a great global store value over centuries, proven. It's a geopolitical insurance policy. It's also a narrative-resistant asset. So the real answer is simple. Gold is the asset you own when you want exposure to the failure of everything else. It's not an investment. It is a hedge against the financial world, not a part of it. So why is this topic so controversial? And because gold sits outside the hierarchy, people project their beliefs onto it. But gold debates aren't about gold. They're about faith in institutions. They're about distrust of governments. They're about fear of inflation. They're about memory of past crises. I think they're about geopolitical anxiety as well, and ideological identity too. So the gold argument, I think, is physiological. And that's why it will never end. Thank you for listening to Special Edition 3 of the Global Ledger. We touched on a topic that carries a lot of emotion, also carries a tremendous amount of history, but also with it some misunderstanding. Gold isn't money. Gold isn't irrelevant. Gold isn't the answer. And gold isn't, obsolete. Gold is simply outside the system. And that's why it matters. In the next regular episode, we're going to return to the core storyline of liquidity, valuation, and global finance. So once again, I'm Justin, and thanks for being here.